PCM TV is supported by Salient Systems, a world leader in video management security, and by Revolutionary Clinics, a medical dispensary where the patient comes first, and by Accounting Buds, your number one CPA specialist for the cannabis industry. PCM TV is supported by Salient Systems, a world leader in video management security, and by Revolutionary Clinics, a medical dispensary where the patient comes first, and by Accounting Buds, your number one CPA specialist for the cannabis industry. Well, thank goodness gracious and God too, it is Friday. Hi, everybody. Welcome to the Green Rush Live. I'm Jimmy Young from Pro Cannabis Media.
And I'm David Rabinovich, and we're joined by a great guest today, Bruce Linton.
Well, that's right. And, you know, when David comes up with these theme ideas and he said, we're going to do the art of the deal. And I said, well, the one guy I want to talk to about that is Bruce Linton, who may be has actually maybe created the biggest deal ever in cannabis history at some point. Bruce, welcome back. And it's great to see you.
No, it's good. And congrats on what you've been progressing with yourself, sir. Appreciate
that. So the art of the deal, when you think of that, Bruce Linton, what comes to mind for you?
So it's really weird, but I was on a call. So I'm involved with a bunch of companies now, and they're always trying to do transactions. And transactions or deals fall apart, not often because they're a bad idea, but because they take too long and lawyers eat them. And so part of the thing I was saying to this first-time CEO who's trying to do a deal, I said, here's how it actually has to work. You think you agree. And if you don't want to do the details, you make a joint venture. So a joint venture simply says, I'm not sure, but we'll just kick the can on being sure, and we'll have some other governance. We'll set up a board, more overhead, because we don't want to fight today. We don't want to deal with the details. I don't like that. So I said, here's what you have to do. The art of the deal is if you're going to buy a company, we'll talk about getting investment in buying a company. If you're going to buy a company, the first thing you have to get to is what's called the exchange ratio. What's that mean? Well, nobody's buying a company typically for cash. What you're going to do at the result of doing a transaction is that you're going to have a new partner in your business, and they're going to own a certain percentage of it. So if I wanted to buy PCM into my company, we'd be negotiating if you were going to have like 20% or 40% of Bruce Linton Co. That then would turn into an exchange ratio, which means how many of my shares do you get for your shares, because we all have different cap tables. If you cannot agree on that, you don't have a deal. And you should not begin due diligence. You should not begin anything until you agree on that, because once you put that pin in, you freeze that exchange ratio forever. Nobody gets to change it. What it also means is if you're a public company and you want to leak information, and I'm a private company, if we don't have the exchange ratio and I'm just going to be buying you at a future date, you make yourself puffed up. You start to sneak the word out. So the first thing on a deal is make sure you have a deal. Make sure you have an exchange ratio. Because then what you're doing isn't due diligence. You know, when you go poking around the company, you're not doing that to say, do I like this company or not? You said, I like this company. And when you're doing your due diligence, it's what I would call confirmatory. I want to confirm why I like the company, not try to decide if I like the company. If you're buying a company that you think might have intellectual property, so suppose I think you've invented something I don't know, I can never look inside your company directly, otherwise I become blinded. And what I mean by that is if I see your intellectual property directly and personally, down the road, if I don't do the deal, suppose we don't close, you have the capacity to sue me, to litigate, to say that I've actually stolen your ideas. So part of the structure then is you can use a third party. Like we used to use a law firm called Baker's Botts. And what we do is get them to look at, and I've done it since I've left Canopy, I've used them, I think 2 or 3 times, look inside the company and write me a report on their intellectual property without telling me exactly what it is, but whether or not you think it's going to stand up to patent fights, et cetera. So there's ways to learn what you're going to get without making it such that you are forced to do the deal because you know stuff that you can't unknow. Does that make sense? You know what I mean? Like don't get in a spot that you've poisoned your own capacity to act. So I think those are kind of key things I pushed on people. Now, if you're going to have money come in, so if you want to have investors, two things I learned over the years. One is when someone buys a stock, they have to know when to sell it. Right? You don't make a gain unless you exit the equity. And so one of the things I tried on people and it worked really well was for about between 11 and 8 months prior to legalization in Canada. Every institution I went to, every institution that I wanted to invest, because we always needed money, I would tell them, I think you should sell half or more of the equity in my company 1 month before legalization. So shit, nobody ever comes here and tells us when to sell. I said, well, it's like a lot of things in life. Anticipation exceeds reality. However, the reality is that that's the instance, right? But if you anticipate something and you stay with it, the reality actually can become better than you expected. Otherwise, nobody stays married. But the key thing is, I said, you should sell my stock, half of it or more, a month before public. I said, well, why? I said, well, that whole story. And they said, well, we don't own it. I said, now I think I can have a meaningful conversation with you about how much you should buy. What percentage of the portfolio you should allocate to me, because you know your exit window. Now let's agree, if you think through what my logic is between now and that window, what's going to happen with legislation, what's going to happen with marketing, what's going to happen with media coverage, what's happening with globalization, why this is going to get super hot. And so I found that if you take a novel approach that provides an exit point, you can often find people who will enter who weren't going to. The final thing is, if you think it's kind of related, and I meant to do that, it's when did Constellation put their big check in with us? About a month before the actual legalization, because everybody's worried about missing something. And over the medium term, they're already better off. But in the short term, people went, oh, why did you put your money in? Look at it, went up and went down. Who cares? They know this is not a one-year game. This is a lifetime game. And so they put their cash in long term, but it signaled to the market, get super excited. And so to me, the deal is usually you want to deal on anticipation rather than factual results, because, you know, every quarter changes. And I even now, like, look at some of the things I'm involved with now. Like if you look at Gage Cannabis, I got my Cookies hat on, Cookies Detroit. I don't know if you can see it. It's a special limited edition. We began trading on Tuesday. Oh, it comes out of the gate, it goes up, then it goes down a bit. If you're smart enough to play the stock hour by hour, terrific, good to be you. But if you actually said, is Michigan an awesome market? Yep. Is having a leadership position in a state where there are no MSOs very important? Yes. Is having cookies sole and exclusive a very great way to have high value product? Yes. And so if you actually looked in it and said, my goal in stocks is to have 5 that I would like to own a lifetime, right? Like if you said, I really want to pick 5 things that I would like to own for a lifetime, maybe generationally, pass it on. That's how, to me, first you got to say, like, are the people running it that way? So I got involved with Gage purely because when I went to see them, I went around with a guy who'd spent hundreds and hundreds of millions of dollars on infrastructure creation, having started off with crappy stuff we built and got better every iteration. What I saw at their place was like version 10 of our stuff. So they were thinking long term. And so like when I see stocks trade up and down, I don't like deals that are for a press release. I like transactions that are durable. So that long blabbing, but like you see a lot of people who want to put out news, right? Oh, we got to get news out. And how long news lasts? That's why they print it on paper. It's very thin, right? It's news because it's over that day.
Right.
I do not like press releases that are for news, and I don't like deals that, if anybody ever puts a press release out that announces a letter of intent, I would sell that stock instantly. And the reason is you should only press release those things which are material and concluded, which inform the shareholder of your present state of value. If you put a press release out that says we might do something and people buy the stock and you don't do something, that's a disaster. So I like transactions rather than, you know, deal flow and news. But I really think put a longer term horizon. I think one of the best transactions we did, nobody even still talks about, which was the acquisition of C3, which is the single biggest cannabinoid supplier in Europe, which was a division of a huge company. And they're very clinical, which is very European. And when Canopy puts the results out that says things are going well, I think places like, Storz and Bickel continue to contribute to that, but I think C3 is a big player on that. So, it's not as sexy, but it's very durable.
There you go. Wow. I tell you what, I need to start taking notes on just about everything you say. I heard about 40 things in there that made a lot of sense to me. David, I know you were busily working on some ideas, so you got something for Bruce? Go ahead.
No, Bruce, talk to the audience a little bit about some of the SPACs you've been involved with. Oh. And if I recall, CGROU was going to be looking at cannabis in Europe and ended up in LiDAR, right?
Yeah. It's sort of like, how do you go? You go out to buy a hemp pizza and come back in a driverless car.
Yeah, that was it. I bought a bunch of that. So
let's begin the story. Special purpose acquisition companies. That's what it is called when it's called the SPAC.
Yep.
And the way it works is you are basically getting as much as you want to put in. So we raised $150 million US and we're traded on NASDAQ. And that capital came from about, 20 institutions. And they buy these units. So it's a $10 share price. And what they get for that $10 is a share and a warrant. And the way it works is there's 50 plus days after it starts trading, they can sell the share and keep the warrant. Until then, they're stuck together. So think of it as one thing stuck together till about 54 days. Now it's two things. And so with that one, the people who put in the $10, they know we were looking at trying to do something with hemp. And what I did is we looked at 172 companies. And what we could not find was a single entity, which was substantial enough, because if I have $150 million cash, what I need to do is a transaction let's call it $1 billion. And the way that works is I'm not buying you for cash. I'm going to issue more shares and leave the cash in the bank. So after the transaction, the resulting company is publicly listed and has $150 million in the bank. Now, the tricky bit is, so in hemp, there isn't something that big. So you start trying to think about, how do I put the pieces together to make something that big? And when you start looking at that, most of the little companies aren't ready to be public, meaning there's an accounting standard called PCAOB, which means you can report reliably your financial statements. So when we looked at all these places, you could maybe put about 5 things together, but then they wouldn't be ready to be public. And so what you have to do is at some point in time and say, well, what have we learned? Well, we learned that cars could be made more lightly, not so heavy. Batteries better if you used hemp. Who's really good at that? BMW. They're very advanced in their technology, as you would expect for BMW. And then you start bumping into things, and it turns out the LiDAR company called Innoviz that we ended up doing the deal with is being built into the BMW cars. And if you bought a BMW electric car made in Germany, up to 21% of it's already made with hemp. And so you start saying, oh, that's kind of interesting. And then you say, well, who's the principal builder that's going to take the LiDAR system from Innoviz and put it in with BMW? And it's a Canadian company called Magna. They'd invested early in Innoviz. Well, because Canada is a small place, like if you said, do you know Joe from Canada? I probably do. And so it turns out like with one phone call, I can have a call with the CEO of Magna. And I can ask a bunch of questions about, why did you put the money in? Would you wish you had to put more in or less in that, so you can do your due diligence? And so what we realized was that this was probably, in my opinion, the most ready to be in market system being built into BMW cars right now that could go forward. And Elon made the right decision when he did his deals. He didn't have this technology at this price point. But with this stuff, he'd be wildly crazy not to upgrade to it. And so this looked like, to me, the winner, the leader, the potential to have drones to this, to tractors, to trailers being driven around with driverless. And it's out of Israel. It's super engineers who've done a bunch of things. So we did a transaction with them. And everyone who bought those $10 units sold the stock in January or so, because they could keep the warrant worth, say, $3, sell the stock for, say, $15, $16, $17. And now the warrant's worth maybe $3 to $4, and they think it's terrific. They wish I'd do another one. Now, one thing I should add, all those unit holders, if they didn't like the deal, could have voted in favor of it and asked for their $10 back, which would have meant Innoviz had no money. So the trick of the trade is that on top of your SPAC, your special purpose acquisition company, what you have to do is a secondary financing, which we did in January, called a PIPE. A PIPE stands for Private Investment in Public Equity. And so the effect of that is we raised, and the guys did an amazing job. I barely was a part player. I'd show up and say, hi, I'm Bruce kind of thing in these meetings, but they raised $232 million, I think was the final number. And that money for sure stays in the account. So when we started trading on Tuesday, they had over $300 million cash, a liquid stock, and are off to the races. And it was terrific because usually you have 24 months to do it. And we started trading on March 1st or May 1st, 2020. And as of Tuesday, so 4 or 5 days ago, they are listed and going. So it was quite a short time that we took to do that. And I almost did a second one. Like I might still, but I probably won't because there's now been 600 or 700 of these things put out there. Like celebrities and sports people, they're all making SPACs. And what's going to happen is, I think there's going to be a log jam. And what I mean by that is in about 6, 8, 10, 12 months, all these guys are going to be running around saying, oh my God, I'm going to lose all my money in another year if I don't do a deal. And they're going to give away everything to do a deal. And so what I'm thinking about is how do I make a company? How do I put together the pieces I thought of before to make a company? So when these dum-dums are all out of time with all their cash, we can come in and help them not lose all their money, but we can make a whack of money by stepping in with a great company. And so SPACs are a very funny thing, but it's basically, Jimmy, here's the deal. They said, Bruce, we're going to give you $150 million. We're going to give you a liquid currency. Do you think you can make a deal? Jimmy, if I can't make a deal with those two combinations, please take my hat, take my glasses, take my computer. I'm retired.
Would you shave too? Would you shave too?
No, I'm going to a nursing home. I'm done. It's over. Like you got a liquid stock and you got cash and you can't do a deal. Come on.
I guess so. Hey, hemp or cannabis? Which future is bigger and brighter in your estimation around the world?
So hemp, as designated to mean the stalk and fiber part, as well as the protein potential, is game changing on supply chains to create everything from the clothes you're wearing to the car you're driving. Game changing.
Right.
And it's going to change the agricultural landscape in America. It's going to change the sources of protein. So it's game changing. It's going to have a different margin model because you don't pay a zillion bucks for the bumper on your car, but it will change fiberglass to hemp. It has more categories of impact. I think the whole cannabis plant and all those cannabinoids, we saw the Jazz acquisition of GW, the potential for all of these things we call rare cannabinoids to become pharmaceutical components and ingredients, pet care. I think that is maybe not as big in total absolute dollars, but way bigger in profits. And, you know, just the global macro trade, like we're going to, in our lifetime, in almost every country on the planet, cannabis will be regulated. And when I say regulated, it'll either be medical or rec. And it's just because ignoring it is bad public policy. You do not make money as a government ignoring shit. Right. And it's listen, there's three things to cannabis. They regulate, they tax, and they educate. That's all they're doing. Regulation, taxation, and education. And they have to do the education. They don't want to, but they can't make it look like Jimmy, when he was in grade 8, was going to go get stoned because they didn't educate. So they have to educate in order to cover their ass on the taxation. And so there's no governments, unless they have super deep oil fields in the Middle East or something, that don't need access to the flows of capital. So I think it's going to be, it's going to happen. And people go, well, listen, when New York State regulates, ask everybody on the planet, name one city in America, you're going to have like a 98% hit rate on New York as a city most will reference. And New York as a city and a state is a globally iconic element. It has the media outlets that are covered. As this rolls out and people still show up at Wall Street and work, you know what's going to do? That is the sea change. It's not Colorado. It's not California. It's not some weird little state. This is New York. And I still find that it's been underreported in terms of, I think, the global impact of that decision on the public policy of the world.
Well, they're talking about creating a $4.2 billion industry in New York and looking at $350 million in tax revenue annually in that state alone. So how do you ignore that? You don't ignore it. It actually is moving the needle at every state. Almost every state in the union these days is looking at a way to get more tax revenue, to bounce back, have their economy bounce back. I mean, you talk about the perfect storm. It's the perfect storm of reality right now for the cannabis reform movement, because it can cure so many things, right?
Well, and when you say cure, most people who go to a doctor, the doctor studied at a time before the endocannabinoid system was actually validated as existing. And so I guarantee you those numbers do not capture the potential intellectual property torque and pharmaceutical value that's going to happen at Columbia and NYU and all the universities that have hospitals that can. So like, think about it. Like, your doctor was educated around the same time as somebody went, there's this thing, I'm pretty sure, called an endosystem. And so like when people say, well, we don't have medical, we don't have, I said, for God's sakes, like most doctors didn't even know the existence of this when they were in their academic fields. So like those numbers do not capture the torque. And, I think when you think about the corridor on the East Coast between Massachusetts and New York, the potential for those institutions of, I'll call it pharma creation, the evolution of what these things are, the inspiration, they're just going to crush it. And I fundamentally think that, like, I'm a broken record on it, but if you can get somebody to have the munchies when they have an oncology treatment, that's unbelievable.
Right.
You can also, therefore, I suspect, pull the button and cause people to have a suppressed appetite without triggering the liver. So when you start to think about like, what are the potential appetite suppression, weight loss, sleep, like, most things that we treat are because we all get too fat. Like, I had high blood pressure. You know why? I was 30 pounds fatter than I am now. You know what I found out is you have less blood pressure when you're less fat. So like all these things are going to start to weave together where we start thinking about inflammation, weight control, all of the expression of those things in terms of medical ailments. If you could just treat, like, COVID made me lose weight. Why? Because I wasn't on the road. Like, I tried to deny myself nothing. Like, if you go to a restaurant and they're famous for making something, you should probably have two of them. And so being at home and like this restaurant, I told my wife I'm going to give the restaurant like 2 stars on TripAdvisor because I've been here for like 13 months and I've never at lunch been offered, would you like fries or salad? It's always salad. It's a very bad TripAdvisor review, but all of the things that we could do with cannabinoids that I think will cause people to actually have a more healthy life state will then cause all of these things as we get older. Like, the biggest market that's going to be impacted short term, I'll call it communal living, geriatric care. All these folks that died in long-term care facilities, we're also now saying, what the hell actually goes on in there? Like, how do you run them? What do you feed them? What medicines are they on? What exercise do they get? And so I think when we look at that, we're going to say, what, you're giving people like 3 or 4 drugs a day to deal with anxiety and mobility and appetite. Why don't we use cannabis? Right. $740 billion business just looking after old folks.
Right. And the fastest growing demographic group is the 50+ group in the cannabis space right now. Hey, Bruce.
Yeah, and you know what, Jimmy, if you want to bring cannabis successfully to, say, Japan, talk about how you help the people who are a little bit older.
Right.
You want to bring cannabis successfully to, say, the Middle East, talk about how you help horses recover from races and workouts. Because the horse population there, super well thought of, extraordinarily expensive, and a way in the door. So there's going to be on-ramps that are different by place, but they're not going to be all people rolling a joint.
I get you. Hey, I'm looking at the clock. Can you stick around for a little while to join the next half hour? Or do you have to run?
I'm good for like another 10, 15 minutes. With the amount you pay me, man, I just got to keep staying.
Hey, Jimmy.
Yes,
let's just double his speaking fee for today, and let's keep him for another half hour.
All right, I want to know.
I can stay for at least another 15, and then I actually have a call with some Australians at 5 I got to get ready for.
Fantastic. All right, I get that. So we do take a break at 4:20, and I get to talk about the origination of the Waldos and the guys from San Rafael, California, who used to meet at the Louis Pasteur statue. You know the whole origin, right, Bruce?
Snoop Dogg puts it out there every day.
I love that. Well, I do it every week at 4:20, but I tie it back to my own experience because here in the Boston area of Massachusetts, we used to listen to an AM daytimer back in the day that was alternative rock called WCAS AM 740. And they used to play this song Shanty by Jonathan Edwards. Now, do you know the song Shanty, Bruce?
I'm ready to hear it. I hope you got it queued up.
Yeah, of course we have it queued up. We're going to play it. You're going to listen to it. You're going to love it. The guy lives in New Hampshire to this day, and he's performing it at a radio studio in New Hampshire. We'll come back with more of Bruce Linton, and then we're going to add in a few more of these guys to the fun as we talk about the art of the deal on the Green Rush. Don't go away.
Yeah, this is a tune that I wrote back in 19... I've forgotten. We had a saying in our old band, one of my first bands in 1966 or so. What are you gonna do tonight? Oh, just, you know, like every other night, just gonna lay around the shanty and put a good buzz on. Gonna sit down in the kitchen, fix me something good to eat. Make my head a little high, make the whole day complete. Gonna lay around the shanty, oh mama, and put a good buzz on. Pass it to me, baby, pass it to me slow. We'll take time out to smile a little before you let her go. We're gonna lay around the shanty, oh mama, and put a good buzz on. You're on something. Go ahead. Rick Brodsky, everybody. Nothing to do and there's always room for more. Fill it, light it, shut up and close that door, baby. We're gonna lay around the shanty, mama, and put a good buzz on. Take it, okay. Prohibition never works, it's time to realize it. It grows in my backyard, it's time to legalize it. We're gonna lay around the shanty, mama, and put a good buzz on. I'm going to sit down in my rented car. I'm going to jam it into drive. Going to head on out and play at WSCA with Sean. I'm glad I'm alive. We're going to lay around the shanty, mama, and put a good buzz on. Every night and day, we're going to lay around the shanty, mama, and put a good buzz on.
Hi, I'm Ben Shower, New England rep for Salient Video Management Systems. Let me tell you what makes us different in the security space. We're your trusted advisors for all your security needs. I know how complicated the regulations are in cannabis, and working with Salient Systems will be the polar opposite of that. I give free consultations and will walk you through every step of the process so that you can get what you need at the price you can afford. We're robust, we're simple and scalable. We're Salient Systems, your solutions to all your security needs. Please contact me at the information below, and I'm looking forward to being your trusted advisor.
PCM TV is supported by Salient Systems, a world leader in video management security, and by Revolutionary Clinics, a medical dispensary where the patient comes first, and by Accounting Buds, your #1 CPA specialist for the cannabis industry.
All right, welcome back once again to a Friday afternoon live edition of The Green Rush, the business of cannabis. I'm Jimmy Young with Pro Cannabis Media. We've got a great lineup in our Zoom room, and I got to tell you, I'm very excited about introducing quite a few of these guys. One has been with us on a somewhat regular basis. His name is Peter Vogel from Leafwire. Peter, thank you so much for joining us again.
Thank you, Jimmy. Always great to be on. A pleasure.
And we also have Todd Sullivan, the co-CEO of Cannapreneur Partners here in Massachusetts area. Todd, welcome back to the program.
Thank you for having me again. I always enjoy these so much.
Todd, this
And
is
of
what?
course-
Todd, is this your third or fourth time on?
I think fourth.
Really? Because
Okay,
when you
fourth.
get to 6,
I get a gold watch.
we have these SNL themed smoking jackets.
Like a master's jacket I get to put on after I get
That's
to
it.
6.
When you
That
get to
works
6.
I
We
get to-
also want to
I get a joint
introduce
instead?
Jeff Finkle from the Arcview Group. And Jeff is an old hometown boy of myself back here in the Massachusetts area. Jeff, I appreciate you sneak us into your busy schedule.
Thanks, Jimmy. Great to be here.
Hey, Jeff,
David?
that was a great event that you guys put on the other day. The pitching event?
Oh, great. Yeah, Pitch Force. Did you
Pitch
enjoy
Force.
it?
That was, anybody who didn't watch that missed out. That was a really great event.
Yeah, I thought it was pretty good.
That's whatever. David Rabinovitz is alongside here, as he always is. And David, you had this great question. This is a perfect time to ask all of these gentlemen that question. Do you remember what it was?
I don't remember, Jimmy. We talked about a lot of questions. I
No,
know.
one question in particular.
Well,
Okay.
lay it out for me and I'll ask.
All
Whisper
right.
it in my ear, Jimmy.
God. Okay. So the theme of today's show is the art of the deal. What David wants to ask is, you guys have all been in deals that turned out to be good deals, and some that you thought might work might be turned out bad deals. How do you know do you know when you go into that transaction, which way that's going to go? Was that the question, David?
That was along the lines, but we're going to go with it that way. It's along the lines of what's been the things what makes a deal work out well, and what are the signs that you know it's just not going right and it's going to tank.
I do want to give hometown
Todd-
advantage. I'm going to start with Jeff on this one,
Okay.
if you don't mind.
Go
Jeff,
ahead.
go ahead.
Well, so the first thing is you don't know, particularly at early. Look, when you're investing growth capital, more of a private equity exercise. There's why am I on here twice?
Don't look at the screen. Just talk to the camera.
You're making decisions based on historical revenue profits. It's richer. When you're investing early, like we do, you really don't know. I mean, you have your checkbox on what you're looking for, but you don't know. And actually, it was very interesting. There was a study done by First Round Capital. Josh Koppelman is on the tech side, does a lot of early deals. He took a 1-year snapshot of, I think, the 30 deals he had done, and they had ranked them in really 4 quadrants of what they thought would be most successful, 10, then the next 10, and the bottom 10. And they looked at it like 2 years later, and they found out that half of the first 10 was the most successful, but for very different reasons than they forecast. And then the other 5 that were most successful were in the bottom quadrant. So you don't really know. You have your thesis and you invest with that in mind, but you really don't know. To the next part of the question, I think there's some pattern recognition that you see early on. Traction not happening, people leaving, a lack of energy in the company. There are signs along the way that inform you, despite what they're telling you, that it's going sideways. And, good investors that are really try to hop in, roll up their sleeves and help when they see that.
Todd, go ahead.
Yeah, so I completely agree with Jeffrey's analysis. You don't know, and honestly, some of the deals even with Cannapreneur and even before when I did angel investing, that I was the most confident in turned out to be the biggest disasters. I mean, I invested in one group. The guy was great, perfect background, great. Turned out he was suffering from bipolar and was what stopped his medication and just went completely off the rails. And that's something that's you just can't predict anything like that. Stuff like that just happens. And then some of the deals I was like, I'm not really sure about, but you know what? It's a great location. It's a good business. Let's just give it a shot. They turned out to be the home runs. So you can vet all you want, but there's some stuff you just can't vet for. And when you're early stage with us, I think you just kind of have to accept the fact that, you can only do so much. At the end of the day, we're really early stage, right? We're infantile early stage. You're investing in that person, right? And you can dig all you want, but sometimes there's things you don't know. And sometimes they're a huge negative, but sometimes they're a massive positive and they work out for you. So it's very risky, but you try and mitigate that risk.
Peter, talk about your experience.
Yeah, so I guess I'm coming from a slightly different area since Leafwire doesn't invest. I personally have been a smaller investor in a variety of companies that just this last year, 2 of them have gone under. So I don't know if I am the greatest judge. One was a hemp farm that was doing great, and then essentially there was some things stolen and it just shut down and the entire crop was lost. Another one was a CBD store that we were convinced was going to be a home run. We were partial owners of, and that ended up being way too competitive environment. And we shut down right before the pandemic, that pandemic would have killed us anyway. But so obviously I can't tell, but I would say I would agree 100% with what Jeffrey said earlier, is that one of the things I commonly see, and it's interesting, when I started about 3.5, almost 4 years ago now, I met tons of people in companies who I admired a lot, who I thought were doing amazing things. And, a year or two later, they're gone. And there's been so much of that in cannabis. Companies have come and gone over and over and over again. And you think they look great from the outside, but I think not meeting milestones early on is a really bad sign. Because if you can't set and hit milestones early, I would say it's pretty much impossible. You're going to be able to hit them a year in, 2 years, 3 years, 4 years down the road. Another thing that we've seen a lot is, and Jeffrey made this point too, staff turnover. If you see people leaving the company in early stages, it's an obvious sign, because most of the time that's like the honeymoon period. In the very beginning, everything should be roses, exciting, and you're just building. And if you're losing much staff at all in that very first phase, I think that signals a real sign of the management not being either consistent or solid or dependable or good leaders, and people just don't like working for them. So those I think are the earliest signs you can see.
And the cleanup hitter in the room is Bruce Linton. Bruce, good deals, bad deals. Is there something specific that you look for that you just got a gut about?
So I'm generally not an investor. And so when I say that, I've made probably 15 investments, but the way I do them is that I insist that I'm buying myself a part-time job. And so if I put capital and I want to put time in to create more value, if someone's reluctant to have like a structured 15 to 30 minute window every Monday that they participate with me and their management team, so that we can understand what's gone wrong, not what's gone right, but what's gone wrong and what the opportunities are for turning bad things into good things. If they're reluctant to agree to that, then I assume that the way they're running things is probably not satisfactory to me. When I'm on the corporate side, which I prefer to be, you can't worry, you're going to do a bad deal. What you have to do is go to bat often. And so I've said a bunch of times that if you do a bad deal, that makes it more urgent to do another deal. And so I see so many people who their prior transaction didn't go particularly as expected, and therefore they become reluctant to do another transaction. Well, no, that's the absolute incorrect reaction. So if you do a bad deal, then you should determine what was wrong with it as quickly as possible and do another deal. Return to momentum, positive outcomes. And so at the end of the day, everything that I've ever observed, if I was buying a gravel pit, I don't need the gravel to like me. The rocks do not need to like me. I'm buying no goodwill, I'm buying rocks. Most transactions fall apart because you destroy goodwill in the transaction. Sometimes you make one that's too good for you and too bad for them, and you expect them to stay. So sometimes you need to actually think in the defense of the counterparty so you retain goodwill. And if you do 30 deals and they only do one deal, who has the advantage? Don't use it wrongly. You make a bad deal when you destroy goodwill by being overly greedy. And I did have at least 2 occasions where I had to talk an entrepreneur into changing the deal to take more in a different way because we needed their goodwill. And so I don't know if those are relevant, but to me, what you're typically, and it's been referenced, you're not actually investing typically in something, you're investing in leadership. And one of the worst things I can see in leadership is greed. So if the leadership insists on substantial control of all equities to themselves, massively differentiated salaries, it's a bit like being invited to your house, Jimmy, for say a Thanksgiving dinner. And what you do is invite me over, and then you bring out the food and you fill your plate and eat all that you can, and then ask me to sit down as the guest. That would make you a very bad host, and that would make you a very bad leader. I don't like to see people who act that way.
I would never do that to you. And I have great stuffing, by the way. I
Right.
make great stuffing.
So that's interesting, Jimmy. And there was this movie, there's this kids movie a couple years ago called Robots. And in it, the dad was an entrepreneur and a founder. And he said, and his magic was, he goes, see a need, fill a need, right? And that's what he would invent. And I think, listen to Jeff and Peter's, and some of the most, our biggest disasters were the businesses we were most convicted in. It's like we see the need and we see someone come along that can fill that need. And I think sometimes as investors, like, oh my God, someone figured it out. Let's invest in this person because they're going to fill this massive need. But there's operational risk with that person. So I think there are some times where as an investor, you see this ocean that this person's going to fill, and you get too involved in the need that's being filled, and not, does this person truly have the ability to fill that need? And if they don't, then it doesn't matter how big the ocean is, they're going to drown.
Yep.
Jeff, you always talked about the importance of team. That sort of reinforces that, right?
No, I'm gonna say something. Maybe I'm not so controversial, but devil's advocate a little bit. So the first thing that I would say is people leaving early on is exactly that, a failure of leadership. But not hitting milestones early on is a little bit more forgivable because stuff happens. And markets sometimes take a little bit longer. In cannabis, certainly there's all the licensing issues and other things, but even in tech, where I spend most of my time, things just generally take longer.
Yeah.
I've seen some companies that really have missed the mark in years 1 and 2 and then killed it in year 3. So I'm a little more forgiving on milestones early. But the thing that I would say, which is a little bit of devil's advocate or controversial, is I think team is important. But believe it or not, most companies fail because they have a solution to a problem nobody has, or if they have it, it's not topical, right? Meaning it's not top of mind and they don't know they have it. And again, I'll be sort of the guy that talks about studies, but honestly, one of my favorite ones is Bill Gross, not the bond trader Bill Gross, but Bill Gross, who did Idea Labs in Pasadena, California. It's the first real incubator. And he did a study once where I think it was 100 companies that had gone through his incubator, plus 100 from outside in the tech industry. And I think he created sort of a rubric of 5 reasons companies could succeed or fail, right? Strength of the balance sheet, strength of the team, strength of the product, defensible moat, whether it was patents or whatever. And he tried to rank the reasons people failed. And it turned out that the overwhelming reason is that there was no problem that the solution was here.
Yeah.
And it wasn't team. So I sometimes say it's a luxury to fail through bad execution. Some companies don't even get there. They just miss the mark. They've invented a problem that they see, but they didn't do customer validation well enough. And therefore they had something great, they executed, but nobody wanted it. Think of Friendster versus Facebook. So it's all about the timing. Some of these problems are real, but the timing was wrong. And when the timing's wrong, it's like pushing a boulder up a hill. versus having tailwind into your sales.
You nailed it. About 5 years ago, IBM came to see me because we had to use their whole strategy on a blockchain approach to managing cannabis.
Oh, I think I remember that depth.
They had this humongous overhead. I said, you guys, if you can tell me that I make more money, have more trust, show me the benefit in any material way of adopting your platform, I'm in. But instead, they kept explaining to me how the whole blockchain worked, and I kind of got it already, guys. And it was like this hammer running around trying to find a nail in the cannabis field so they could actually have a great thing to do. And I don't even know if they're still pursuing it, but it was an absolute, exactly perfect example of what you described, where failure was because there was no match to a purpose.
Right. Or the wrong time for it.
Yeah.
Right. When there's a wrong time for it, you're going to chew up a lot of capital until it's the right time for it.
Yeah.
Jeff, we're going to let you in on your cell phone, just like
Thank
you
you.
asked, and appreciate the fact that you were able to carve out some time.
I'm gonna hang on, but I'm just gonna be doing it from my car.
That's all right.
Okay.
We've got a
And you
good
guys
vision.
keep Jimmy on his toes. I got a call with a bunch of Australians at early their time in 14 minutes that I got to read something before.
All right, go ahead, do it, Bruce. Hey, thank you so much to both, to Bruce Linton. Again, always a pleasure. Follow him, like him, share him, subscribe to him, all of the above, right?
Be good. Thanks, Jimmy. Thanks, guys. Nice seeing everybody.
Take
Thanks,
care.
Bruce.
Jeff, and we'll be talking to you on the phone too. So if you want to jump in anytime, hopefully that'll work.
Yeah, I'm willing to be let in.
Yep, we could do that. Dan will take care of that. David, you got something next? Because I got something if you don't.
Go right ahead.
I knew you'd do that. What's the... Whoa. Wait a second.
I'm good.
Somebody's got two on and we're getting some feedback. That's a kind of a new thing for us. So I'm not sure what's going on there. But let's see. I want to ask Todd, first of all, how's your vending machine venture going?
So far, so good. They're in Colorado. They have interest from 5 other states, dispensaries to get in there. We have a decent size order coming from a new manufacturer in Spain. So we're going to have state-of-the-art vending machines rather than retrofitted vending machines. So we're optimistic that that it's going to take off. They're getting traction. There's a lot of interest in it. So the one stumbling block right now is consumer behavior. It's getting consumers to walk in and use the machine instead of going to the bud tender. And I think that's a function of a lot of new consumers probably coming into the market and not knowing what they want and not having an exact order down. But we are noticing the trends are increasing and the interest from dispensaries is certainly increasing as they're looking for ways to speed customers through and reduce the lines outside of them. So.
Well, I'm pretty sure that Jeff can still hear us. I understand now in the world of cannabis, the M&A market, the merger and acquisition market seems to be gaining more and more momentum. What's that an indicator of? That there's enough money out there that the bigger fish are going to swallow up the little fish? I mean, is there an analogy there for us? Jeff, I think you can hear me.
Yeah, can you hear me, Jim?
Yep, we hear you.
Okay. I think it's a few things. I think it's confidence that we're on the path to federal legalization. And, if you look at where the acquisitions are, if you break down the 12 subsectors that make up this industry, the overwhelming majority of acquisitions has happened in the cultivation and retail space.
Gotcha. But isn't control, that vertical model, isn't that what everybody seems to be looking for? I know when I talk to people and they always drop it in, well, we're a vertically integrated company. Todd, is that what you're looking at? Is that what you're seeing?
To be honest, in Massachusetts right now, some of the cultivation deals kind of scare me. There's a lot of capital structures out there assuming wholesale prices stay around $2,500 a pound or $2,000 a pound for the next 5 years. And I'm highly skeptical, given the amount of cultivation coming online in Mass, that's there. Where I like the smaller boutique cultivations. Worst case scenario in my mind, we're self-supplying our cultivations. We're not relying on a wholesale market that I think is going to normalize like the rest of the nation in a few years. So I'm not that overly I don't feel this desire and this need to be vertically integrated for us. I love the dispensary. I love extraction and manufacturing. I think that's a great business that's going to get much larger over the next 2 to 5 to 10 years. I don't believe soccer moms are going to be vaping or smoking on the sideline, but I do really believe they're going to put tinctures on their coffee or pop a mint in their mouth before they go watch that game. So, and I think it's really underrepresented on the East Coast. We're in the process of partnering with a West Coast extraction company to bring some extraction to the East Coast. And honestly, having tried the product in both states, what we have for vaping here on the East Coast is I would say a distant cousin to what you can get on the West Coast and in Colorado, some of the products out there. So we're very excited to bring experienced extraction people to the East Coast. I think we'll have one of the best products on the East Coast when we open our extraction facility. So this is just based on my personal testing of the products.
Gotcha.
Todd,
research. I get that.
I'm sorry.
Jimmy, I think I'm back connected. Can you hear me?
Yeah,
Yes.
we hear you, Jeff.
Okay. Yeah, we're sorry. I think I got cut off when I went into my car. Just to finish up, I think that's where we're seeing most of the activity. It's in anticipation of federal legalization and people getting footprints in other states. To Todd's point, which is a good point, today in Massachusetts, it's almost a requirement that you have some light cultivation capability because the supply and demand is way out of balance. There's really not enough product being grown for the retail demand.
Okay.
So it's almost important to do it, but I think we'd all agree.
I'm like hanging on every word. We're getting some Wi-Fi.
All right.
Okay, am I doing a disservice to you?
A little bit. Yeah, it's okay.
He's back now. He's back now.
All right. Anyway, my final comment is just simply, I don't want to look at a Massachusetts company that's going to have too much in fixed assets and cultivation, because I think down the road that's not the place that's going to grow cannabis at the right price and at the highest quality. But it's a necessary evil right now.
So
I looked at it. I looked at a deal yesterday. They wanted 100,000 square foot cultivation for 25 million. I can build 10 to 15 dispensaries for that, right? And if legalization comes and wholesale prices collapse, my dispensaries or my extraction facilities do way better, right? And much more valuable. And my cultivation really gets crunched. So that's kind of how I look at it.
Yeah.
Go ahead, David.
What do you, Jeff, what do you see as the most valuable component in the supply chain? Is it the cultivator, the product manufacturer, the extractor, the home delivery, the retailer?
So that's only part of the supply chain, right? So we're reinventing, we're evolving our investing thesis for the second half of the life of our fund. And one of the three things that have popped up for us are, one, we want to focus on the cannabis consumer of the future, not the past, right? So now you start to think about edibles, beverages, light beverages, microdose beverages, sparkling ones. But, it's hard to pick a brand, right?
Well, we heard that it was hard to pick a brand, and then he went into Wi-Fi space.
Yeah. He's 100% right in the beverages. I was out in Vegas last week, and they can't keep them on the shelves. I mean, the sparkling beverages out there, they sell, it's a 6-pack, 2 milligrams per drink.
Part two of the thesis, which is supply chain.
Oh, so hey Jeff, we lost you for about 15 seconds.
Yeah, I'm here. Can you hear me?
Yeah, we can now. But
I'm so sorry, but these beverage companies, there are places to play in the supply chain. There are terpene manufacturers. There are nano-emulsification providers that are.
There's a Grateful Dead song called "Not Fade Away."
Yeah,
this is what's going on with Jeff Signal right now.
Selling to many of the beverages, and I agree. I mean, some of these beverages are phenomenal. Yeah, keep fading up.
Well,
all right, sorry guys. I'm going to shut up and listen.
Great to hear from you. Every little nugget we appreciate. I do want to bring Peter in though, because he's been patiently listening and taking notes. Peter, in your platform on Leafwire, you have that opportunity to sign up for people who register as investors. Can you give us a success story of someone who has used Leafwire connected with an investor and has actually funded a company?
Well, I would say probably the best success story I can share is actually Leafwire, because we've actually raised money from our own investors on Leafwire.
Yep.
I think it's about a handful. I think I've gotten about 5 investors who, in various points of our raise, actually probably even more now that we did the crowdfund. Before we did the crowdfund, I think there were probably about 5 people who came through in either our, it probably would have been our seed round, or maybe it was our convertible note round, but we had people come in and invest that had essentially only seen us on Leafwire. And that's one of the advantages, is they got to know us over the course of a year or 2 years before they saw that we were fundraising. So it's kind of it's a good way to build a relationship. But we have close to about 3,000 accredited investors in the platform. And we do various emails for companies who want to reach those accredited investors. A lot of the success stories we don't always hear about, because we're really the platform to connect the people. Once they get on a phone call, once they start meeting in person, we're not necessarily, we don't take a piece of it. So we don't actually have a record of that or any financial compensation. We're really just, as being the LinkedIn of cannabis, we really just act as that connection platform.
I've heard SPAC, I've heard convertible debt notes, I've heard there are how many different ways that can you get involved with a company besides just a specific, I'm going to write you a check for cash. Todd, how many different deals can you structure that have different paybacks and returns?
We really prefer the convertible note strategy. It allows us the most flexibility in the investment, and especially in a limited license state like Massachusetts. If we could take convertible note stakes in, 5, 10, 15 dispensaries, we can look back in a year and these are the top 3 and convert those notes, and then either sell off the rest of the other ones or do whatever we want to do with them. So I personally like that strategy. Just, as a group that takes outside investor money, I think for us, it really mitigates our risk to any one investment, and it gives us the most flexibility for our investors.
And I would agree with that from the point of view of the company raising. We did do a seed round initially, but as we were kind of on our way to an A round, we didn't want to have to set the valuation yet, because we weren't sure what it would be in 12 months or 18 months. So it gives a lot of flexibility, and I think it gives a lot of comfort to investors that they can put money in and get a 15 or 20% discount while they're also usually earning, I think we did 6% on our note. So you're earning some interest that will accrue, convert as well into equity eventually. But that way you can raise the money, you can use the money to grow, the investors get the benefit of a discount, and then the valuation can be set in your next round by a group of professional investors. It doesn't have to be just a decision made by you and your board sitting around coming up with how much you think your company's worth. You can let a group of investors kind of decide, okay, we think this is fair, this valuation of X million.
I gotcha. All right, Jeff, I think we're going to say thank you to you for the effort and joining us as always. But please keep in touch. Okay.
Thank Peter, you, Jimmy.
All right, great to hear you and see you. Actually, we've got a whole new room that is going to be coming in, I believe, next. So, Peter from Leafwire, as always, a pleasure to talk with you. Thank you so much again for joining us, Todd. I can't wait so we can all get back in the studio again.
I know,
socially distanced, right?
I'm done with Zoom. I'm sick of staring at people on screens. I want to be able to walk up to someone and say, "Hi, how are you?" and talk to them in the face.
Soon enough. I've got my one shot. I think everybody is getting more in one shot, and please continue to do that and be safe out there. So, Todd Sullivan from Cannapreneur Partners, thank you so much. Peter Vogel, thank you. Jeff Finkle was here. Bruce Linton was here. Don't you go away. We're going to take a break. When we come back, we're going to fill up the room again and get back to the art of the deal on the Green Rush. We'll be back after this.
PCM TV is supported by Salient Systems, a world leader in video management security, and by Revolutionary Clinics, a medical dispensary where the patient comes first. and by Accounting Buds, your #1 CPA specialist for the cannabis industry.
I really enjoy what I do. There's a couple different reasons for it. First of all, I've always been an accountant, and it's kind of a nerdy thing to say, but I do love accounting. And I also love helping companies. I love helping people build their companies, especially small to mid-sized startups. I've always been someone that's, in all my roles in industry, it's always been building teams, building companies, building departments. And to be honest, I love working for myself and owning my own company. So I love what I do every day.
Take your Zoom call podcasts or webinars to a whole new level.
Nurse Mark and the Green Nurse Podcast. We are here.
That's right. PCM can animate your logo, add eye-catching full-screen graphics, and lower third identifying motion graphics. Look like the network. Act like the network.
We are Pro Cannabis Media.
PCM TV is supported by Salient Systems, a world leader in video management security, and by Revolutionary Clinics, a medical dispensary where the patient comes first, and by Accounting Buds, your #1 CPA specialist for the cannabis industry.
Welcome back to the Green Rush Live on Pro Cannabis Media. A reminder to like, share, and subscribe to our content. We are now streaming 24/7 on a Roku streaming channel called PCM TV, Pro Cannabis Media TV. I'm Jimmy Young, the founder of Pro Cannabis Media, and I usually host this show with a guy named David Rabinovitz. Oh, wait, he is here. David, take over. It's your show now. Congratulations.
Okay. Thanks, Jimmy. So we're back. We have Todd Sullivan with us, who's been with us since about 4:30. Todd's with Cannapreneur Partners. They're probably the leading private investment firm in Massachusetts. We got 3 new guests. I'm going to let them introduce themselves, but I'll just give a quick overview. Mark Hill and Steve Ike are with Green Earth Partners. They're former Wall Street investment bankers that have dived into the cannabis industry. They bring a great deal of structured approach. These guys are people who really know how to do deals. And then we have Aaron Goins, and anybody who's a regular viewer knows we love having Aaron on with us. Aaron is one of the leading advocates in Massachusetts, as well as an entrepreneur getting his business put together. So Mark, why don't we start with you? Just quick intro.
Steve, I'll go first. Mark Hill, Green Earth Advisors. We are ex-Wall Streeters for 30 years. We've gravitated to this business through our lower middle markets business, which is Touchstone Advisors, pretty much out of Connecticut. There at Touchstone, more basic industry, aerospace, chemicals, transportation. We do extremely good national sales of companies that come to us that want to sell. We're very process-oriented, very detail-oriented. We throw a huge amount of man, woman hours at our projects, and we really have a system. And basically, as we approach the cannabis industry, which is more of a, well, it's young, you can call it what you want to call it, but it's not the chemical business and it's not the transportation business. And we've sort of taken our process and successfully been able to go out and recently made a very good sale on a dispensary to a public that struggled to sell, and we did very well. So we're process-oriented, and I'll sort of leave it at that for now and let Steve introduce himself.
Yeah, I would echo what Mark said, and Mark covered most of the ground that needed to be covered to introduce Green Earth Advisors. My Wall Street background was primarily on the hedge fund side. And the way it related to my transition to middle market M&A was I invested in mergers. So these were publicly traded mergers, and they tend to be larger situations. But that allowed me to segue to the other side of the table, where I joined Mark at a company called Touchstone Advisors, which handles industries outside of cannabis. And then Mark and I, along with another individual, formed Green Earth Advisors to focus specifically on the cannabis space, because we recognize it as an enormous opportunity set, as an area that's going to be extremely transactional in the years to come.
David, unmute yourself, David.
There we go. Aaron, you want to unmute yourself and give us an update as to what you've been up to the last couple of months?
Going through the process. Hi, by the way, Aaron Goins. Actually, like Mark and Steven, I'm a former Wall Street guy. Started out my career in equity research, covering ubiquitous systems, contract manufacturing, semiconductors, then transitioned over into derivatives, where I did volatility arbitrage and some other dork and geek type of data type of stuff that'll just bore you. From there, left Wall Street, helped start the largest pediatric radiation therapy practice in the country, but that was boring. Thought medical was regulated space, has nothing on cannabis. Once Massachusetts decided to go rec, my wife and I made the decision that at 44 years old, let's go for it. And this is where we're at right now. We're currently going for our delivery operator license, cultivation and product manufacturing licenses, based out of Wareham, and also looking for a second delivery hub as we speak right now. I guess I could offer a little bit of a different perspective from everyone else on here. You guys will be the ones I'll be pitching to. Right now, I'm actually in the middle of my pitch. Constant pitches every day, all day, for just started 2 weeks ago. So probably got another 2 weeks to go, and make some decisions on which investors I think are the best match for what we're trying to accomplish here.
Great, good. Jimmy, you look like you're about to say something.
Well,
No?
I want to ask a question that I've heard asked before, and it has to do with pitching, okay? And I don't mean off a 60-foot, 60-inch mound and all that. I mean, when you're presenting your business, Aaron, to others, is it important for a company to have one person that's all they do?
I think so. I mean, listen, the way I'm the one who does the pitch. A lot of people, when I do my pitches, I speak. If you don't know your industry, then you shouldn't be in this industry. If you want to stop me on the street, or you can stop me at a urinal in the bathroom, I can give you a pitch, no problems, right then and there. But I like to tell people that you should know your business and know your industry. That's not just me saying that. That's just, I guess, my years back as an analyst. You just have to do your due diligence, be very thorough, very methodical. And that's the kind of approach that we're carrying to cannabis. And that's the way especially being married to an accountant, sadly to say, I'm not the most anal person in the family. And by result, she's actually going to be our COO. I want nothing to do with that. I'll be the CEO. Yes, I like to say you keep it with one person. Someone should really know the in and outs, and that should be the CEO. CEO doesn't know it, then they shouldn't be the CEO. I like to have the CFO as a sort of backstop. I remember in my Wall Street days when you're taking companies around town, pitching into, I was on the sell side for part of my career. So you're taking companies around, pitching them to the buy side. It's always the CEO and the CFO. And the CEO is always there, CFO is always there as the wingman who's able to offer that level of granularity. The CEO should basically know the direction, the vision, and the overarching strategy and the tactical moves that you're choosing to make in order to achieve that strategy. So that's really the approach that I take, it's not as nerve-wracking. People approach me like, "Oh, Aaron, how do you do it? How you do it?" It's just been doing it for years now, so it's a lot easier, I guess.
Let me throw a question to Todd. Todd, I moderate community outreach meetings for various groups in Massachusetts, and I'm sometimes surprised when they're making the presentation to the community as to why they're going to be a good partner for the community. Many of the entrepreneurs shut up. They don't want to say a word. They've got their security consultant who speaks. They got the engineer who speaks. They have me who provides some industry data. They've got their attorney speaking. How important is it for the lead person to do what Aaron was just talking about, to really know it inside out and become the face of the presentation?
I think at an HCA meeting or a special permit meeting, it's not necessarily that important for the CEO to be talking, because they're really asking questions of engineers or lawyers or whatever. And honestly, that's questions that engineers or lawyers should be answering. But, you know, to Aaron's point on pitching, yeah, I don't want to hear anyone but the guy in charge pitch me. You know, at the end of the day, he's making the decisions, right? If he doesn't deem the capital raise that important, he needs to be there, I have to question his commitment to the company, right? Because at the end of the day, if you can't raise the capital, there's no business. It doesn't exist. So that's really, as a CEO and the early stage that we're looking at, that's really job one, is get the money to get the business off the ground. So I want to hear from you. But at the HCA meetings, you know, generally it's a very structured, and the special permit meetings, they're just talking to the engineers anyway. So I don't know that it's that important. And I would be concerned that as someone who doesn't have an engineering background or doesn't have a construction background, I wouldn't be inclined to open my mouth at any of our meetings because I'm going to say something wrong, right? So yeah, but when it comes to the pitch, Aaron's 100% right. If it's not the CEO, there's no point in talking to us.
So can I add something?
Yeah, absolutely.
From our standpoint, because Mark and I have been involved on the money raising side as well, and we've worked with companies to get them to the point where they're ready for for prime time and to go out and we try to connect them with the most, what we believe to be the most relevant, receptive investor audience. And I think it's a hybrid. I agree very much with what Aaron said and what Todd said. I think that the CEO has to have a depth of knowledge that sort of encapsulates the whole picture and the whole story and value proposition. And he can have or she can have scaffolding around him in the other individuals in the room. I mean, some investment banks that Mark and I have been involved with in the past, I'll just say, throw Goldman out as an example. Goldman will fill a room with people because there's something impressive about that sometimes, but it does help to, you have to have all bases covered, and you want to show that your grower, is extreme, has a demonstrable, track record and experience, and he's going to be a guy that's going to be able to handle, whatever gets thrown in the way of the company, the challenges that inevitably will arise. So I think it's a combination of having that very strong central figure like Aaron, and then other people in the room that you can sort of point to and maybe go a little deeper into, whether it's the cash flow statement or something a bit technical about the business's future.
I'd like to ask a question, a kind of a general question for all you guys about the future of this business. A lot of MSOs are out there gobbling up other smaller entities, and there's 4 or 5 big players now in the MSO universe, moving into New York, moving into New Jersey, eyeing some of the other new legal states that are out there. And yet there's the other side of the coin where there's a social justice movement, and there's definitely a feeling in this country that sometimes this mom and pop guy, the guy that the communities that have been most impacted on the war on drugs, are not getting a fair shot. How are you in a position to impact any kind of a social strategy for these bigger companies or the middle companies that are getting acquired, on making sure that there is some kind of a initiative to help out others on that? Mark, why don't we go with you on that one, since we want to get you involved here.
I think the natural flow is always towards oligopolies and monopolies if you let business do that. We know that.
Okay.
So basically it comes down to regulation, Jimmy. It really comes down to that. And I hear what you're saying. I totally agree with you. Do we want to see the Home Depots and the Lowe's happen here? No, we don't want to see that. That is the natural flow. So it's about regulation, I think, more than anything else. There will be, there'll be less players. I mean, what did we have 100 years ago? 100 car companies? Well, we're not. We're going to have less at some point. Is this going to be sold out of CVS, or is it going to be sold out of Costco at some point? Probably not something for us to worry about in our business careers. But it really comes down to is regulation. And people would say, oh, we're all against regulation. No, I don't think that that's true. I think that there's a balance. And I think that given that, if we get the right people in there, they can regulate so people can all make money. But it's regulation, Jimmy. That's what it is.
So socially responsible capitalism, is that a myth?
No, I don't think so. I think and then I'll keep quiet. I don't think so, because I think that look, none of us here are millennials. Well, no, Aaron probably might be millennial.
Aaron's in his 40s.
No, Aaron, you're 44. I'm sorry. Okay, so I forget where the cutoff is. Okay, but my point is,
oh God, no.
I am amazed that the millennials, which are I think 92%, 92 million out there right now, they are socially responsible when it comes to business. They just are. All right. So to answer your question is, yeah, I think that the teeth come off the monopoly, oligopoly type mentality, and regulation probably works better. So I think that it can work, and it can work well. The millennials have a very different attitude towards money.
So you're actually putting a lot of pressure on the regulators to do the right thing. Aaron, are you confident in our elected officials and our regulators to do the right thing at this point in time? Are they educated enough about the industry to do the right thing with regulations?
No, it's sad to say. I'm not insulting regulators at all, but as a Wall Street person, you look at the SEC, they're always behind the ball on every creative mind on Wall Street. It always has been, it always will be. They regulate in the past. They regulate, they're reactive. And you're going to see the same elements within cannabis regulation as well, too. It's going to be highly reactive because you have a lot of creative, forward-thinking minds who are in this business to make money. Unfortunately, they just don't pay enough in government in order to be a regulator, sad to say. So I think, yes, it is going to be part of the regulators. But man, I get scared sometimes because government loves to tax something. If it keeps on moving, regulate it. And if it keeps on moving, then you just shoot it. And so it's a very fine balance. But in terms of social equity, this is where it tends to hit me a little bit more. Especially as somebody who spent, over a decade on Wall Street. I was always the only Black person in the room, always. Never, ever, ever saw anybody else that looked like me. Always looked forward, always survived, did very well doing what I did. But it's a very different perspective that you come from. And I'm a little bit more fortunate. I've been able to work alongside of people who have a lot of money and who also know other people who have money. So for me to be able to make calls to people and set up pitches is a little bit easier than the average social equity participant. It's a very difficult game for 99% of them, and I have conversations with them. And so what we have right now in this industry, if we really want to talk about social equity, is a huge chasm between private funding and social equity. And in order to bridge that gap, you almost need an intermediary, someone who can actually speak to both sides. Because truthfully speaking, a lot of social equity participants, the second that they see, and no offense, a white guy in a suit coming towards them, they automatically think, here comes a predator. Okay. Now, on the other side of it, I hate to say this, a lot of times, social equity participants are viewed as don't have as much business acumen or don't have the experience, all the general vernacular that we tend to put around something when we really know what we're actually talking about. So we have to be a little bit more truthful and really more honest and not be afraid to actually have legitimate conversations on this. And let's not treat social equity like that new hip dog that you put in Paris Hilton's purse and you walk around and parade around town. Treat them as partners. And there are very talented individuals, including myself, who is very interested. Well, I always ask myself, I do a lot of reaching out to do pitches, but I never have people actually come to me. Don't have the VCs, don't have the private equity guys. I have some family offices that come to me. It's very interesting because I like to think that I'm a very qualified individual who has a very unique perspective in this space. And I get very shocked a lot of times when it doesn't matter one way or another, I'm gonna get into business and we're gonna be successful at what we do. But it's just, wow, somebody's right here in front of your face and I'm just shocked that I don't get calls from a lot of the really, really big players. I don't know what it is, you tell me.
Interesting. David, go ahead.
Oh, I get it back now. Okay, cool. Todd, you looked a moment ago. I got the sense that you wanted to jump in with something. Was I reading it right or no?
Well, I think so. If you go to regulation, I think a lot of times regulators have the right motive, right? Especially when you come to the social equity program, they have the right motives. They want to secure a certain level of ownership for equity applicants. They want to spread the wealth, bring people into the business that previously have not been able to be in the business or have suffered because of they were in the business, but it wasn't legal. But sometimes the equity requirements disincentivize investment, right? If I'm looking at two investors and I have shareholders, right? This isn't my money, right? This is other people's money who have invested in me. And I look at two deals and equity status or any kind of status aside, if I can only have 49% of a deal and I'm giving 100% of the capital, and there's another deal I can have 70% of it and I'm giving 100% of the capital, I have a responsibility to shareholders, all things being equal, to take the other deal, right? And I think a lot of equity candidates are getting hamstrung by that ownership requirement for 3 years. Here's an example. Nature's Remedy in Massachusetts, not an equity candidate, spent $1 million building a dispensary in Worcester, Mass, next to the new Woosok Stadium. Before it opened, sold to Truly for $13 million. Okay?
Oh!
Yes. Okay? That happened. Now, equity candidate, non-equity candidate, I don't care. 10% of that deal is generational wealth for a lot of people, right? Yep. 20% is beyond what they're ever going to expect to see. Limiting ownership, I think, is a huge mistake that a lot of regulators are making in these equity deals, because there are people who are willing to give up a lot more of a deal who aren't equity candidates, and it's just a better financial deal. It really is. And I understand the desire of regulators to help and do good, but at some point in time, you have to go, why are equity candidates having trouble getting funding? From my perspective, it's because it's just the deal structure. I can get incredibly better economics in other places for the same deal, same quality applicant, similar locations, et cetera, as someone who has outside capital. I have an obligation to take that better deal.
Todd, have any of your deals come to maturity where you've exited them yet, or not?
Ours?
Yet? Yeah,
not yet. No.
Okay.
Well, I mean, we were invested in Nature's Remedy, so I guess by a third party, but not directly. No.
I mean, can I just hop in a little bit on what Todd said? And I agree actually 100% with what Todd is saying. We also have to understand the genesis of these equity ownership requirements as well too. And I'll be very, very honest. I've seen some horrifically predatory deals out there. Just awful. One second. Sorry.
Who are we dealing with? Avery or Wyatt?
It's a Friday tradition here. It's a Friday tradition that Aaron's kids have to make an appearance on this show.
Wyatt.
By the way, we all laugh about the Zoom enterprise. Todd, I heard you. You know, I get it, but you know what? It softens the intensity of the discussion too a little bit when we.
Well, how about this? I have a 7-year-old and a 4-year-old. How about they go to your house and soften the intensity?
Send them in.
I will allow that to happen. You pick one. Pick whatever. They're both potty trained. Good to go. But to get back on what Todd said, I agree 100% when I'm speaking as the capitalist Wall Street mind in terms of when you're structuring a deal. Absolutely, I agree. But man, there are just so many predators out there. And I mean, some of them are just so blatantly egregious, and that it would never fly with me. Even like it was just, I'll tell you, go pound sand the second you even walked in the room with that offer. But they know that there's a situation here where it's a scarcity value, where that you have a social equity participant who has an inability to find capital because he didn't have the privilege, such as me, to work in an environment surrounded by other individuals who have money. So they view this person coming in as their white horse scenario, and that they have to jump on that. And a lot of times these investors understand that. So they're going in, asking everything that you can ask for 49%, and putting so many covenants within it with optionality triggers, all types of insane triggers. And so part of me is that I agree 100% with what Todd says. The other part of me is that something has to be done to stop that behavior. And I don't know if it's a free market principle way of stopping that type of behavior.
So I have a theory that if we just simplified the whole process and said equity candidates have to maintain 25% of the economic interest, total economic interest in the company, I think you see a flood of funding into equity applicants. It would eliminate a lot of the predatory funding. It would let a lot of the predatory, because I need 25% equity interest in this company, or economic interest in this company total. And you know what? Hey, it's going to turn people's lives around. And in this business, at this point in time, you don't need 51% to change your life. 10 to 20% can change your life. And what's more important in changing your life isn't your percentage ownership in the company, it's getting the money to get it off the ground. Because we all know in Massachusetts, you build that dispensary, you build that extraction, you're printing money. You're going to do great, right? But it's getting that money in the first place. Lower that ownership requirement. You're still creating the same incentives. You're still creating the same outcome. You're changing lives, and you're giving people generational wealth in many cases, but you're getting more of them involved, right? And right now you're getting the top applicants, the most, you're going to get your money, right? Because someone's going to look at you and they're going to say, Wall Street guy, ran a business before, knows what he's doing. You're going to find your money. But it's the people without the experience. Okay, so I'm going to bring in capital, but I really got to bring in an operator too now, right? And now all of a sudden, but 49%, that's a lot of risk for me, right? At maybe I own 60% of that, 75%. That's not so much risk. We can all win. Everybody wins. And the equity candidate, whether it be just through passive cash flow or a sale of the enterprise, he makes a boatload. He makes a killing, he or she. That's my theory.
Mark and Steven, I'd like you guys to weigh in on this. What kind of deals do you see as far as the structure goes? And are you starting to see any kind of change in that?
If you want to go first?
Well, yeah, I would follow, from what Todd said earlier about the regulator has created a structure, unfortunately. And then I think it was Aaron who said that the regulator is always behind. And Mark and I have seen that firsthand, where especially in this social equity paradigm, it leaves the applicant often hamstrung because the resources, as Todd just pointed out, are not insignificant to build out a dispensary. And one of the biggest reasons for failure, and something that I think probably gives David a lot of business, and there being licenses for sale, is people that underestimate. Maybe it may not be their fault, but it's hard to handicap the amount of time and resources it takes to sustain the process, and then to actually get the license and then build it out. And people, bump up against a resource problem that leads them to sell potentially at fire sale prices. So I agree. I think Todd came up with a great structure, the 25% structure, because very often, Aaron may take issue with this, but there's a social equity I love. We can all appreciate the concept, but you might create a mismatch between the management capability because of the person's background that ends up with that license and their ability to execute on it without some operational assistance. So I think the structure, at least for that 51% requirement and the 3-year requirement, is somewhat flawed.
Yeah, I mean, if I can pipe in, Todd's 100% correct. This is a pegged currency right now. This needs to float.
That's a great point. Yeah.
All right. So I think we can leave it at that. We know the gold, 73 gold started to float. It just needs to float. And Todd's exactly right. It creates generational wealth. So, 49 versus, we know the math. We all know the math. We've all participated in this math. So let it float. Regulators, and I'm not, don't get me wrong. I'm not a regulator. The SEC is years behind with, it's all late. It's all rear view mirror. But the issue here really has to be, they've got to get this thing floating faster. And that will be the case. And somebody really has to sit down with them and say, basically, less is more, which I think regulators don't kind of get. Taxes, more taxes, good. All right. So Todd's right. You give them 25%. We all know what that basically what that pro forma is going to look like from that standpoint. Now, can you get them there? Oh, I don't know. Less being more is a tough one for them. But until they do that, they'll be away from the markets, right? Those deals will be away from the markets. It's as simple as that. You need markets to work freely. So in this case, you've identified it. Can the regulators do it? I don't know. I don't have the great faith that they can, but maybe they will in 2 or 3 years. What will it? And the issue here is you really want to have these deals done now and not 3 years from now when you're federally regulated, because the spreads will come in. There'll be less money made. So basically, as they can deliver this in 2024, and it's like, thanks a lot. Okay, thanks a lot. Good job. So if they're going to do it, they got to get on their ponies now and do it. Otherwise, it'll be opportunity lost.
I mean, I agree. I agree 100%. And I think what I'd say is I'd rather make 1,000 people a millionaire than one person a billionaire.
Absolutely.
Right? I mean, if you want to improve and lift everyone up, the more people you can help. You don't need to make someone $30 million, right? I mean, hell, $1 million in my life will make a huge difference right now, right? And if you're an equity candidate, and it's generational wealth for that family. And I think the more people we can do that for, the better. But right now, unfortunately, it's concentrating those results into a few people. Not nearly as many as you could.
But nobody has actually attacked the problem of how do you stop these? And it's not just one, it's not just two. I have seen multiples, David has, of just disgusting absolute terms that are just out there, which give the impression at face value that it may be fair. But somebody who actually lives in the world of term sheets and LOIs, and you start digging through the covenants, you're like, holy crap. They're literally going to strap this SE in a debt cycle or a debt spiral. Then the day after exclusivity ends, have an option trigger of which they're going to purchase them at 5x EBITDA, knowing good damn and well that the company has been strapped, that they're not going to even have any EBITDA. So they're going to purchase them at cents on the dollar for the remaining 51%. Like, this is where I get very upset. And I'm a free markets guy. Shit, I'm a black Republican. So I say to myself, okay, I get it. I understand Wall Street. I get how this all works in the deal structure. But anytime I hear people say we have to lower that percentage, how do we stop this behavior from happening? Because it will happen. And I know I know people who will do this. So how do we stop that, Todd? That's why I don't necessarily think that type of behavior is exclusive to equity candidates, though. I mean, I've seen people try and do stuff like that with everybody, right? There are predatory groups out there, right? There are hard money lenders. There are loan to own people who basically want to give you a loan because they know you're not going to pay it off and they're going to own your business, right? That type of behavior is out there. No matter who you are, no matter what race, sex, gender you are, it's out there. I think, and again, I'm not a regulator, but my instinct is that if you eliminate warrants, you eliminate a lot of these covenants, you just say basically this person is 25% of this business and X, Y, and Z aren't able to be done in this thing. I think it doesn't solve the problem because
again, like you just said, we could take the most egregious contract right now, regulate everything out of it, and they're going to come up with something else in 6 months, right? That's just who they are. But we can simplify the required structure for these deals, so all these things aren't able to be put in there. Because that's what happens, right? You got someone, you're going to own 49%, 50% of this business for 3 years, and here's just fine print on page 38 of this contract, and they don't read it, they don't know, their lawyer misses it, whatever. But if you simplify what can be done in these occasions, give the investing group larger upside if they have to bring in operators, things like that, but still secure a part of this business for this person, I think there's a much better way to do it than we're doing it now. I think right now it's just 51% for 3 years. And that excludes, look at the Nature's Remedy example I just gave you. That excludes social equity. No social equity candidate could pull that deal off. Right? Before they opened the doors, they sold this thing for $10 million with stock options, and because of the stock, truly stock went up, it's $13 million deal right now. They put $750 to $1 million in it. Never opened the doors for business. Never hired a single person. There's not an equity candidate who could do that, and that's a tragedy. That's a tragedy.
Reap them for more than that. It is, though. It is a tragedy.
That's a tragedy.
Yeah, it is. I get it. Listen, there's the education gap also as well too. Let's just be honest. And I'm not talking about actual formal education, just plain business acumen. This is my second. Yeah, it's my second or third go around at a startup. You learn something each time. I learn more from my failures than I have from my successes. And so when you lack that, it makes it easier to be preyed upon, or I want to say that word, to I guess a little bit more be taken from you, I guess you could say. Listen, I don't want to beat a dead horse on this. I just see some of it out there. To me, I do believe it's disproportionately more on the social equity side than other general applicants.
Probably true.
I'm not saying that's a 90-10 scenario or anything like that, but all I want to do is just ensure that some way that we could have this somewhat mildly regulated that allows free liquidity, the markets to flow, but to allow some protective guardrails here to prevent from some of the most egregious behavior. Because at the end of the day, we're all big boys and big girls, and nobody puts a gun to your head to sign something. So
I wouldn't be opposed to some type of an advisory board that looked at these LOIs and looked at these deals and said, basically broke it down and said to Can, okay, here's the economics of this deal, right? An independent third party takes that LOI, takes that contract and says, okay, here's what they can do of this contract. Here's their rights. They can charge you 10% management fee. They can take this, they can do that. Their cousin's going to not work here, but grab a $200,000 salary. That this is what they can do. Here's your real economics of this deal. And do you still want to do it? Right? I think that's better than blanket regulation that eliminates a lot of things. So maybe this guy's happy with 12% of this deal. Maybe he looks at it and says, geez, if I can get 12% of this deal, I'm set. I'm good. That's all I want. I'm happy. I don't know the answer to that, but I think there's a better way than blanket rules. Because I guess it's not working right now, right? We got to do something because it's not working. Right. So I wouldn't mind having. Go ahead, Dave.
Oh no, go keep going, Todd. I was just going to add something.
I really think having not a regulator, an industry group looking at the deal and breaking down every deal for these equity candidates and saying, here's what this deal really is. Here's 40 pages of typing here. Here's what it comes down to dollars and cents for you.
And David, are you ready to take on that job?
Well,
by myself.
I'll tell you. I had this discussion with somebody today. One of the Massachusetts social equity participants, and one of the comments I made was it would be. We were talking about New Jersey and New York and some ideas they had about those new states. And my comment was, if you want to change the way the business is going to unfold, you need to get to the regulator. As an example, one thing the regulator could have done. We're all, everybody knows what a SAFE is, right? Simple agreement for future equity. The Y Combinator put it up there. There's another group that modified it for cannabis. It would have been nice, and I don't blame the Mass Cannabis Control Commission for this. They were the first ones in the East Coast. Excuse me. But it would be nice if the regulator said, look, here's a model LOI for real estate. Here's a model LOI for equity. Here's a model operating agreement. Here's a model convertible note. and here's a model equity investment document, right? You can do whatever you want, but if you haven't been through this before and you're a newbie, so you're just a fish in the water waiting to get plucked out by people with more experience, at least they have guideline documents that the younger entrepreneurs or the less experienced entrepreneurs can say, why can't we use that document? That's the one that the regulator sat down with some people in the industry, a trade association, the Mass Cannabis Business Association, David O'Brien as an example, get somebody like that involved, Aaron, a few other people, and come up with these documents and have them as a resource. So now you're starting to provide the tools to the industry. If you want to buy real estate in Florida, it is unlikely that you're using anything other than what's called a FAR contract, Florida Association of Realtors, Board of Bar Overseers. That's just the standard contract. So you don't have to worry about, is it the Greater Boston Board of Realtors? Is it a different Board of Realtors? It's a common document that you use throughout the state. And frankly, cannabis in each state would be well served if the regulators said, we're going to also give you tools. If they want to run an industry without social equity, you don't need any of that. But as soon as you're going to bring in social equity, you're now talking about trying to assist people who may not have had prior business experience. And to be really clear, these are smart, capable people who have been locked out of opportunity for one reason or another. So that's my comment on the documentation side of it.
I think that's a great idea.
Yeah,
Stephen, you were nodding your head through parts of that.
Well, I mean, I would add, we're talking about the most extreme disparity between, with the social equity applicant, they don't know what they don't know. And, you need to have somebody like David on your side, somebody who understands the regulatory backdrop, the legal landscape, et cetera. I can tell you that in the other side of the spectrum, Mark and I dealt with a very, I think Mark referenced it earlier. We sold a large dispensary on the East Coast, but this company they were in 2 failed deals before we were engaged, and they were great operators, but they weren't finance people. They were pharmacists and accountants, and so we ended up. Not a quick plug for us, but we got them 26% more total consideration than the second failed deal. Our deal didn't fail. And also we got them this was the end of last year, we got them 6 times as much cash in this consideration as opposed to stock, which is something last year that companies wanted. And I guess is a long way of saying that if you want to come with resources in the way of professionals like David that can help you understand the risks that Aaron is raising here, because it's rational for the guy on the other side of the table to get what the market will bear. And there's a real scale. There's still by one study that I read said that I think only 6% of the capital that's needed for the industry is actually allocated right now. You have a weird, only 1 in 30 banks will even entertain the thought. So obviously this is going to change a lot in the next few years with SAFE, the other SAFE, not the one David mentioned. But I like the idea of maybe Todd suggested the board or giving free resources to social equity applicants to allow them to come better equipped to understand the transaction.
So I want to redirect some of the discussion for a moment. And first, let me start with when we put these panels together for everybody in our audience, we try to get a balance. So what the balances we tried to create for this group is we've got Aaron Goins, who understands the operator side, and he's a professional. He's trying to get his business going. On the far ends of that barbell, we've got Todd Sullivan with Cannapreneur Partners. Cannapreneur looks at deals, decides if they like it, they put money in, they give guidance to the entrepreneurs. And then we have Mark Hill and Steve Ike, who are the intermediaries who can help you get prepared, kind of like an agent to help you find the money or sell your business. Let's talk about for the entrepreneurs, because the comment you just made, Steve, is clearly there's not enough money in the industry and trying to find the money is challenging. And what many people don't realize is with respect to a potential funder, you really only get one shot. last fall, I was steering a lot of folks into various pitch competitions. And I told them, you got to practice your pitch, record it on your phone, play it back, and then practice it again. The overwhelming response I heard from everybody who I had steered into a pitch competition, I didn't practice enough in advance, right? That we could have done better, but we got nervous in the middle of it, that sort of thing. So let me start with Mark and Steve in the middle. Somebody is looking to sell a business. Let's start with that. Either sell a business or raise capital. What are the things that they need to do to get prepared to go see somebody like Todd? And I think from one of our earlier discussions, you may have a document to show us. I don't know if you have that or you want to go through it, but walk us through. If Aaron was coming to you as a client, what would you tell him, Aaron? Here's what we need to do to be able to take you to market.
Steve, you want to start or you want me to?
You can go ahead, Mark. Here, I'll show you an example of the document. I think that David, these are called line profiles. It's a one pager.
Yeah, the image doesn't come through too well from the camera, but
it's a one pager that you send out that has the salient points and gives a potential investor enough information to decide whether or not he or she is interested in having a deeper and broader conversation. But that's before revealing all the books and everything else. You want to keep that confidential as long as possible.
I mean, look, if we're the thing to talk about here, I think more so selling a business or raising capital. Let's talk about raising capital because it's harder. Aaron's a perfect candidate to get monies. He gets frustrated that he doesn't get it. The whole world's frustrated. What's going on out there, as I see it, look, we're doing a big raise now for a biopharma company because we do things in various industries where we feel comfortable. And this will be a lot of practice. David, next week, it's just practice with them ad nauseum, all right, until they can do it in their sleep. That's the way I look upon it. So we have that. But to go back to Aaron, I think you said your wife is an accountant, all right? You've got this Wall Street background. It's like, no brainer. This is a slam dunk. It's never a slam dunk anymore. What I find out there is in this country, 2% of the population or 3% seems to have all the investable income. And this is a problem. And you know what? They're hard to find and they don't want to be found often. It's not like it was for Steve and I 25 years ago, starting hedge funds. Money was everywhere. People had money. It was a different flow. They were willing to speculate. My strong opinion is small amount of money in this country, small amount of people have the speculative capital, not necessarily the money. They've made money in the last 5 years. I think you want to go after people who have made fresh money. People who have made fresh money believe they're going to make more money. People who haven't made money in a long time want to hoard their capital. So you have to go to the right tools. Maybe it's biopharma or biotech, and you're playing the CBD side of it. You have to go where there's fresh money, where they're not hoarding. It is extremely frustrating. Not to get off topic, but Aaron, if you ran $1 billion in a hedge fund 20 years ago, and you want to go out today and do it, you'll find $20 million. And you'll say to yourself, what's going on here? You can't take it personally. I think the best place to look for money is people who like to speculate and have made their money. Go back to them. They're the people who can tolerate risk at this point. A lot of money is being made in this country by people who are really not speculators. They've been making products that solve problems. That's what's been going on here. Speculation in this country, I think, is fairly low. When I talk to people who have been successful about raising money, they get it from Europe, they get it from the Mideast, they get it from Asia. They don't get it here. I think our country is older because most of this wealth in this country is held by older people. And I think that they're risk adverse. So I think we all get frustrated from that standpoint. It's across the board. But I think that your wife would agree, Aaron, is transparency is number one. You just lay it out there. That's one. And number two is you're competing for money. These people say, oh, there's $1 jillion out there. No, there's not. There's a finite number of dollars and you have to get on your horse and you got to ride. And you have to say, why should I give it? Comes down to ROE, return on my equity. Will you give me more money than the other guy? Luckily for you, your wife is sitting there and she's pure transparency. That's what it's all about. You will get your money, as Todd said, you will get your money, but it's amazingly frustrating how long it takes. So we're looking at that standpoint there, where we are looking to raise money in some situations. But I think you have to go back to the speculative money, very transparent, really know your pitch and anticipate the questions. People who do well seem to anticipate and read the mind of the person who might pitch. And I think you have to go to places that are smaller. Don't start going to these little institutions where they need 5 people. You got to go to these family offices where the matriarch or the patriarch makes the decision with a sibling, with one of their children. And it's a really, really short conversation. But it's really sort of, you've got to go in there, and there's no excuse, I've got a small business. No, there's none of that. A, it's transparency. B, you've got to sell yourself. And I can go all down the checklist of compliance, but I'm going to assume that everybody does that. But that's what it is. And Aaron, you seem like you're all zipped up, all buttoned up, ready to go. It's frustrating. I see it out there every day. And I think it's because of where we are, who has the money in this country. And you know, it's sort of interesting what rich people tell me, and I get it. You only have to get rich once, so don't lose it. And I think that they're being really tight with the money right now. But my guess is, and Aaron, I don't know you, but my guess is, you know, you're kind of a great poster child for going to get his money. And I think, and it's because your wife, that and your background of Wall Street, which you've had great exposure to doing dog and ponies. You're dog and pony it right now, right?
Yeah. Oh, yeah. Yeah.
I mean, I'm going to be a dog and pony guy for some other stuff, and Steve is too, this coming spring. And it's like, oh my God, we got to do this again and again. Look, that's what it is. At the end of the day, look in professional sports. What do? They just catch grounders. Okay, what do they do? It just watch. I go back to the baseball players and the golfers and the tennis players. They do it over and over and over and again. And why does it look easy? Because they did it over and over and over again. So you're in competition, you know you are. Oh, yeah. And that's the way we can go on about little checklists, but you have to realize you're basically going to compete every single day you're out there with people who, quite frankly, don't have a lot of time for you. They've got other problems. Everybody has to work on their problems of the day. When you come in and you're pitching someone, be quick, understand it, get to the point, because they've got some problems on the other wire that they need to get to. Talking to people who are looking for money, it's kind of a luxury of the day. And I'm sure that Todd knows that as well, okay? Got to cancel with that guy today, why we got a problem here. So that's the way I see it, as being very unique from 20 years ago when Steve was able to go out with his partner and raise $500 million, right? Ain't gonna happen today. So don't take it personally. Just stay to your point and you'll get it. And transparency in this world of small business, and I've owned small businesses away from Wall Street, very Main Street focused. And basically it comes down to it is discipline, transparency, and focus. And just the story doesn't change. Your story is always the same if you're out looking for money. When your story changes, there's a problem. It's like when you invest with a guy or a woman and the story changes, or they call you every week at Monday or Tuesday. Now they don't return your call till Wednesday. Something has changed. All right. Watch what people do, not what they say. So it really is disciplined people will get money. And that's how I strongly feel about it. But man, it is different for a country where the stock market at an all-time high. Finding money is hard.
Mark is 100% right. So we just finished a $5 million raise at Cannapreneur. And we started initially going to family offices and going to big investors, hoping to get a few people to write checks, right? The ideal scenario was 5 people, 5 checks, right? $1 million each. Reality was way different. We ended up raising the most of our money from what we call the mass affluent, the $100,000 to $300,000 check writers, right? These are the people very tied to the stock market, going up nonstop for the last decade. They're feeling good. They're getting nervous because the market's high. They got some disposable income. They got some money in the market. They want to diversify. They believe in cannabis. We struck out with family offices for 2 years because family offices are hyper conservative, hyper risk intolerant, right? They weren't going to touch cannabis until it was federally legal. They didn't, you're not cash flowing yet. Talk to you when you're cash flowing, et cetera, et cetera. Georgia flips in January. Okay. The Senate flips in January. Everybody's outlook changes on legalization. Now we're in a situation now we have to create an SPV to put the extra money coming to us now because we were sick of turning it away. But most entrepreneurs looking for money, and the mistake they make is they go to one person to write that check. If one person is writing you a check, they want too much of the deal. They want control, right? Because it's a huge risk, right? If I'm putting $1.5 million into your business, I need security somehow, some way. If there's 10 people putting 100,000 in, they're not going to be able to require what the big check writer will, right? So from your perspective, I think you get better terms as the entrepreneur having those smaller investors come in than you do going for the 1 or 2 check writers who are going to have the ability, have the background, have the legal team to try and extract some of those deals from people. Things have changed a lot since January, especially for us. I mean, we had a crazy scenario where 2 people sent us $500,000 checks without signing paperwork because they didn't want to miss out on the last of the round. I mean, it's just, things got really weird after January. So the money's coming into it big time. Family offices are now starting to reach out for the first, after 2 years of ignoring us and slamming the doors in our face, family offices now are starting to call. So it is changing out there, but.
If I can interrupt, we sent out an email to family offices, a few hundred. We have a big database.
Yeah, recently?
And they're 3 months ago, 4 months ago.
Yep.
Their interest in cannabis. We got 0 responses, none. And the VCs, we got 2. Some people came back and said, do you really think you should have sent that email out? Well, I got information, so the answer is yes. But we got 2. So yeah, we live in the same world.
Yeah,
but
exactly. It's changing. And it's, I think, honestly, I'm noticing an acceleration of the change. You know, I don't spend the first 20 minutes of any pitch anymore. I must have done 3,000 pitches in the last year and a half, right? I don't spend any time anymore talking about, is the government going to reverse course on legalization anymore, right? That used to be the first half of every presentation and the majority of all the questions. It's not, are we going to be able to do this? It's like, how successful can we be doing this now? That's the conversation. And that's a much easier conversation to have with someone when they're not worried about picking up their phone one day and seeing, you know, cannabis is now illegal nationwide and all their money just got wiped out. So it's becoming a much easier conversation. The money's out there, but I think looking at different avenues for it, you know, one of the best things we ever did, we spent $5,000, went to the Money Show in Orlando, right? That single event ended up netting us about $10 million right now. And people go to those shows to invest money. And those are the investors, the $100,000 to $300,000 check writers. They're out there and they want places to put their money. They want to invest in cannabis, but they don't know anybody to invest it in. They don't know anyone. How do I, if I'm, you know, Joe Schmo in Toledo, Ohio, got $250 in a Roth, I want to put in a cannabis business, who do I call? Who do I call? They don't know, you know, and you know, groups like us doing those public events and getting much wider circulation of your ideas and your thoughts and your value proposition for not a lot of money out of your pocket. I would think you'd have a lot of success doing that. Just a thought.
No,
but,
I thought it's actually,
and honestly, we stopped doing those. We used to do the family office club events, and then we also used to do those. Then they switched to virtual, and that just didn't work. We just stopped doing them. But they're back in June. They're back in July. Orlando and Vegas. Now the Vegas show, these are check writers, right? You don't spend $1,400 in Vegas to go to a money show unless you're there to write a check. So I think different tacks to raise the money are out there. You got to go after all different types of investors.
It's funny because both of you said exactly what I've been experiencing. Prior to this, me starting to pitch, I was anticipating that most of the demand and interest would be private equity VCs coming in. What I've been noticing is a lot more high net worth individuals expressing interest in what I'm trying to do in family offices, which I perfectly aligns with exactly you and Mark just said. That's very interesting sort of shift or dynamic because you kind of make an assumption of where you believe the money was going to come in prior to starting your pitches, because we all have a game plan. You also listen. I didn't wait until the pitch to start pitching. You know, right. I paved a runway over the past year with certain people that I targeted let them know where I am in the process and everything like that or whatever. So that way, when the pitch does happen, they're more in a position to be able to execute on that quicker. So like I said, I think we're going to be just fine. I was more shocked that I'm getting more of the individual and family office interests versus what I thought was going to be private equity, VC. Yeah. And I just thought it was weird, but now I guess it's not weird.
No, it's completely my experience too. What also amazes me is when I see an entrepreneur, they come in, they say, oh, here's our website, here's what's going to look like. And I'm just like, I'm like, you want money, right? He's like, yeah. I'm like, well, why don't you have something on your website that says, do you want to invest in this business? You want to own a piece of a cannabis business? I have not seen one single website from anyone raising money that had a spot where someone interested in investing in the business could put an email in and get information.
Oh, that's a great idea and a great way to end this. I got to tell you, I'm really glad I don't have to pay consulting fees for all your advice on this. I really appreciate you guys taking the time and sharing some of your insight on this, because it's an exciting time here right now as we're getting discovered internationally. And all I want to do is give an open forum for people like yourselves to come in and talk about the things that a lot of industries have an opportunity to do all the time, not in cannabis. That's why Pro Cannabis Media exists, and that's why the future, I think, is very bright here. I want to thank David Rabinovitz, as always, for coming up with these themes every week. And next week, it's the Budding Entrepreneur Week, and we've got some really cool people involved. And we just landed the president and CEO of the Cheech and Chong enterprises out there. Danny Keith is going to join us next week as well. We'll also have a check-in third Friday of each month with Morgan Fox from the NCIA to find out what's going on with the federal reform of cannabis, which, as we know, has been really put down onto the bottom of priorities because of what's going on with this new administration and all the different challenges that they have. And I got to tell you, I am really glad I'm not president of the United States. And I bet you guys are too. Anyway, I want to thank all of you. Todd Sullivan from Cannapreneur, Steve Ike and Mark Hill from Green Earth Advisors, Aaron Goins, always a pleasure to see you and your children. Always a pleasure. And David, and of course, in the last half hour, we had Jeff Finkle. We had the legend himself, Bruce Linton, with us. And as well as the CEO of Leafwire, Peter Vogel, which is truly the cannabis, the LinkedIn for cannabis. I urge everybody on this call and anybody watching to at least register on Leafwire and keep in touch with the people there. So for everybody here at Pro Cannabis Media, I thank you all for watching Green Rush Live. I'm Jimmy Young. Have a good weekend, everybody, and we'll see you next week. Stay tuned for this week's edition of Weed Talk News.
On Weed Talk News this week, Virginia jumps up 3 years on its legalization plan. MSOs setting up shop in New York already. Michigan celebrates 50 years of cannabis with its Hash Bash. And the vice president finally comments on cannabis reform. But don't hold your breath on Weed Talk News next.
We are Pro Cannabis Media.
Hi, everyone. Welcome to this week's edition of Weed Talk News. I'm Jimmy Young from Pro Cannabis Media. So is it me, or does it seem every week another state legalizes weed? This time it's a case of deja vu all over again, as my old friend Yogi Berra used to say. Virginia had already officially legalized cannabis possession and growing, but had delayed the launch until 2024. Now they're moving that up, not 1 year, not 2 years, but this year, after July 1st, 2021, that's when Virginians will be able to grow and possess cannabis in that state. Our man in the Virginia area is Vote Pro podcast, Phil Adams. He has the rest of this story from our nation's capital. Phil?
Hi, I'm Phil Adams from Vote Pro podcast, and this is the Weed Talk News DC report. Well, it's official. Adult use has been legalized in the Commonwealth of Virginia effective July 1st. With both houses of the General Assembly passing the other house's legislation as amended, Virginia now becomes the 16th U.S. state to legalize adult use. The new law allows for the possession of up to an ounce of cannabis by adults 21 and older, as well as cultivation of up to 4 marijuana plants for personal use. The amended bill also authorizes retail sales of cannabis to begin this year, rather than in 2024, as was approved in the bill sent to Northam's desk back in February. The House of Delegates approved the amended legislation with the accelerated timeline by a vote of 53 to 44 with 2 abstentions. The Senate was deadlocked at 20 to 20, with Lieutenant Governor Justin Fairfax breaking the tie in favor of legalization. The legislation has been strongly supported by Virginia voters. A Christopher Newport University survey in February found that 68% of Virginia adults, including 51% of Republicans, favor legalization. In her first public comments on cannabis since the election, Vice President Kamala Harris said recently that President Biden is simply too busy to deal with decriminalizing marijuana. In an interview with the San Francisco Chronicle, Harris said the president is, quote, focused on getting people food, helping them stay in their homes, getting kids back to school, and getting shots into arms. During the campaign, Biden pledged to push for cannabis legal reform, including decriminalization and expunging prior cannabis convictions. Harris explained that Biden has been consumed with coronavirus issues that he inherited from the previous administration. Meanwhile, reform advocates, including Kyle Yeager of Marijuana Moment, point out that the president has managed to take on other issues, such as those pertaining to the environment, immigration, infrastructure, and others. Senate Majority Leader Chuck Schumer said in an ABC News interview last week to expect cannabis decriminalization bill to be introduced, quote, shortly. In January, Schumer said that he and some of his Senate colleagues were planning to merge elements of other cannabis reform bills into a new federal legislation. Industry observers expect the coming legislation, at a minimum, to remove cannabis from the Federal Controlled Substances Act. The bill is also likely to favor small businesses over large cannabis verticals and tobacco companies in establishing a legal cannabis market. Schumer's comments come in the wake of the Safe Banking Act's reintroduction in the House. That bill is designed to protect financial institutions that serve the cannabis industry from federal penalties. That's the Weed Talk News DC report for this week. I'm Phil Adams from Vote Pro Podcast.
Now that New York has paved the way for legalization and sale of cannabis in that state, there are 2 major groups who are waiting for the next steps. The first group is thousands of people in New York prisons for cannabis possession crimes. Part of that law will expunge their records and commute their sentences. Now, according to that bill, the state has 2 years to do that. The other group is the major weed players out there who are starting to set up shop in the Empire State. Green Thumb Industries is a multi-state operator and recently announced they're opening a $50 million facility in Warwick, New York. That's located about 56 miles north of the city. Green Thumb will be building a 40-acre cultivation and manufacturing facility at the Warwick Valley Office and Technological Park. Our reporter in New York City is Deborah Borchardt from the Green Market Report, and she has the look at the biggest players in this business.
It was all about the deals this week. Consolidation continues with Canopy Growth buying the Supreme Cannabis Company in a deal valued at approximately $435 million. Supreme Cannabis's portfolio of brands includes 7 Acres, 7 Acres Craft Collective, Blisco Sugarleaf, and Highway. Now, the combination of a market leader like Canopy Growth and another company with a big position in Canada, Supreme Cannabis, will lead to a pro forma market share of 13.6%. Florida-based True Leaf Cannabis is making a big move in Pennsylvania with the acquisition of Keystone Shops from Anna Holdings. That deal is valued at $60 million. Keystone has locations in Philadelphia, Devon, and King of Prussia. Organograms acquired the Edibles and Infusions Corporation in a deal valued at $35 million. And those are the big business headlines for this week. I'm Deborah Borchardt with the Green Market Report for Weed Talk News.
So which state will be legalizing cannabis next, you ask? Well, it might be one or two, Montana or Connecticut. Montana may be the next since voters approved it in November. Now the legislature there is debating 3 different bills that would set up the medical and adult use regulations. Connecticut's legalization efforts are moving along quickly, with Governor Ned Lamont's bill now approved in committee this week. There are still quite a few amendments to be considered, but it is moving forward. Next up in our continuing roundup for cannabis news from coast to coast is New Jersey with Tara Masu Sargente. Tara?
I'm Tara Masu from Blazin' Bakery, and this is the New Jersey Report for Weed Talk News. This morning, the Cannabis Regulatory Commission announced their first meeting, which will take place this Monday, April 12th. This is a huge step because the CRC will form the regulations for New Jersey's upcoming adult use program. Now that things are getting underway, we should finally see some real progress. Also earlier today was the Cannabis Real Estate Summit. The opening panel consisted of 3 regulators from the tri-state area. Representing New Jersey was Diana Haynew, the incoming chair of the aforementioned Cannabis Regulatory Commission. For Connecticut was Julianne Avalone, legal director of the Department of Consumer Protection. And rounding out the panel from New York was Axel Burnaby, assistant counsel for health to Governor Cuomo. All 3 regulators have been heavily involved in shaping their state's respective cannabis programs, so to hear they've been working together is definitely refreshing, as most have been joking that legalization is a race between states. Haynew closed with, "We will see this region evolve as a cohesive powerhouse in the country." The panel was moderated by our own Edmund DeVoe, president of the New Jersey Cannabis Association. DeVoe called certain real estate areas like Jersey City and Hoboken are Gold Coast, meaning everyone is running there to open dispensaries because of their proximity in New York, but that translates to high costs and extreme competition. This is in line with last week's report on the pending Hoboken location lawsuit involving 2 dueling dispensaries. That will do it for this week's New Jersey Report. I'm Tara Masu from Blazin' Bakery for Weed Talk News.
As we continue our roundup from cannabis-friendly states, it's now time to head to the Midwest, to Michigan. And I have to admit, last Saturday was the first time I had even heard of the Hash Bash, and it was the 50th version of that celebration of all things cannabis in Ann Arbor, Michigan. Our Michigan correspondent, Rick Thompson, was the co-host, along with Anquinette Sarfa. There were appearances from the world of politics and athletics, including Governor Gretchen Whitmer, the Attorney General, and Eugene Monroe from the NFL, along with NFL Hall of Famer Calvin Johnson. With more from Michigan, here's Rick Thompson.
Yes, this is Rick Thompson from MICBD with this week's Michigan Report for Weed Talk News. On Saturday, April 3rd, Michigan experienced 2 very different celebrations in honor of the 50th anniversary of the Hash Bash. Thousands of viewers saw the 2021 virtual Hash Bash broadcast, which featured videos and statements from Michigan's governor and attorney general, sports figures with cannabis industry connections, civic and advocacy organizations, and Willie Nelson. Mr. John Sinclair provided a message of encouragement, too. Funds raised through the virtual broadcast will be donated to the John Sinclair Foundation and the Michigan Cannabis Freedom Coalition. That broadcast went out live on Pro Cannabis Media's Roku network and several socials. A second event was held on the Diega of the University of Michigan campus. About 500 people attended and celebrated history on the traditional Hash Bash grounds. Although cannabis consumption is forbidden on campus, there were no arrests. Lake Superior State University has what is called the first cannabis chemistry degree program in the USA, and one Michigan testing lab has pledged funds to create the Cannabis Chemistry Scholarship. The $1,200 annual scholarship from Steadfast Labs will give preference to residents of Detroit in the award selection process. The school opened their cannabis chemistry program in 2019, opened their dedicated lab in 2020, and used real cannabis bud in classroom settings. I interviewed Dean Johnson from Lake Superior State on Wednesday, and he told me they have a good number of Canadian students crossing the border to take advantage of the program too. And that's it for this week's Michigan Report. I'm MICBD's Rick Thompson for Weed Talk News.
Since we are only about 10 days away from 420, and I don't know about you, but I'm getting inundated with events that are live streaming on that day or places to go on that day. I'll be sitting in my favorite dispensary in Massachusetts at Rev Clinics in Somerville, where we will be live streaming every hour on our Roku channel. But there's plenty going on all over the world, including in Vermont. Here's Vermont's green nurse, Jessie Lynn Dolan, with more. Jessie Lynn?
Thanks, Jimmy. I'm Jessie Lynn Dolan from Nurse Grown Organics and Vermont Cannabis Nurses, and this is the Weed Talk News Vermont Report. With this year's first quarter complete, the Vermont State Hemp Program has audited 5% of hemp program registrants and is on track to complete their goal of auditing 20% total registrants by the year's end. The program rolled out state compliance checks at the end of 2020 based on the established rules and expectations for hemp businesses. They're mostly looking at record keeping, reporting, labeling, and lab testing. Of the 30 companies, over 26% have been issued warnings or compliance letters. It will be interesting to see how the year closes out and how the stated ethics of Vermont hemp companies compare and relates to their actual compliance. One interesting thing to note, the Vermont Hemp Program lab testing mandates are far more rigorous than the Vermont Medical Marijuana Program mandates, essentially asking the question of what matters more, patients or profits. With 420 right around the corner, Vermont's first CBD cafe, Magic Man in Essex, opened January this year, will be celebrating 420, streaming live all day with Vermontawana, offering online hourly raffles, plenty of in-store samples, and live music at 420. 11th Hour Botanical Wellness is another female-owned CBD spa and cafe called Spa-Fe in Middlebury. Be sure to check out Vermont's Cafe and Spa-Fe as you plan your 420 festivities with a pre-order meal from Magic Man or a massage at 11th Hour Botanicals. Either way, thanks for supporting my colleagues and fellow females in the Vermont cannabis industry. That's Vermont Report. For Weed Talk News, I'm Vermont's cannabis nurse, Jessie Lynn Dolan.
One of Canada's most famous cannabis entrepreneurs will be our featured interview at 4 p.m. Eastern Time on Friday's Green Rush Live show. Bruce Linton will join us to talk about the art of the deal. And since he's been in quite a few of them, including one of the biggest while he was CEO of Canopy Growth, he does have some experience in that department. So does our Canadian reporter from MJ Biz Daily's International Bureau, Solomon Israel. Solomon?
I'm Solomon Israel from Marijuana Business Daily International, and this is your Weed Talk News Canadian Cannabis Report. Canopy Growth plans to acquire rival cannabis producer, the Supreme Cannabis Company, continuing a recent consolidation trend in the Canadian cannabis industry. The deal is worth roughly 435 million Canadian dollars. Canopy said it was motivated by Supreme's well-performing premium cannabis brand, as well as its low-cost cultivation facility. And Canadian producer Organigram announced its own acquisition this week, spending 22 million Canadian dollars to buy the Edibles and Infusions Corporation, or EIC. That's a cannabis candy producer with a facility in Winnipeg, Manitoba, which was 43% owned by cannabis producer Agriflora Organics International. Organigram expects to start selling soft chews produced at the facility later this year. You can read those stories and more at mjbizdaily.com. I'm Solomon Israel for Marijuana Business Daily.
Arkansas medical marijuana regulators are being sued over a dispute in a sale and transfer of a cannabis medical license from last November. David Stewart, the mayor of Newport, Arkansas, and a few other plaintiffs claim that the Arkansas Medical Marijuana Commission didn't provide proper notice of a transfer and sale of a license from Natural State Wellness Enterprises to Good Day Farm. The suit also claims that Good Day Farm wasn't properly registered at the time of the sale. Don't lawyers love this industry? Now we go to Illinois with Normal's executive director, Margot Vasili, with the report from the land of Lincoln. Margot?
I'm Margot Vasili from Margowana, and this is this week's Weed Talk News Report from the Illinois market. Curaleaf's social equity planning program starts up in Illinois. The largest cannabis operator in the United States is investing nearly $1 million into 6 Illinois entities designed to provide workforce development programs to mostly entrepreneurs of color who are inspiring to work in this budding industry. Now, Illinois approved all of its possible dispensary licenses. After approving 13 new dispensaries in the last week, Illinois cannabis regulators approved a total of 110 dispensary licenses just before the April 1st deadline. And that's the maximum possible licenses allowed under Illinois law right now. Earlier this year, observers doubted that the 55 secondary site licenses and the 55 same site licenses would be approved by Illinois, since many of these locations were far from approval, and we still haven't seen any of the licenses roll out yet. In other news, Illinois set a record with $109 million in sales for its recreational marijuana in March. That's a huge 35% increase from the previous month. The previous record for monthly sales was $89 million in January. That's the Illinois Report. I'm Margot Vaselli from Weed Talk News.
Another timeout extension in Mexico as that country's Senate continues to sort out the regulations that will dictate their country's new cannabis laws. Now, you might remember that the Mexican Supreme Court issued a ruling to implement legalization of cannabis in Mexico. But since then, it's gone back and forth, ping-ponging inside that country's political structure. Sound familiar? Finally, a word from our Vice President, Kamala Harris. Well, not really, but it is her first public comments about cannabis reform since that administration took over the White House. Now, when asked about when they might just focus on cannabis reform, she said, honestly, right now, we've been focused on getting people food, helping them stay in their apartments, or even stay in their homes, getting kids back to school, getting shots into arms. That's been all consuming. You think? I would feel guilty just bringing that up with all the crazy stuff going on in the world right now. Now, if the cannabis world can wait 80 years just to get to the 16 or 17 legal states right now, the rest of the country can wait a few more months anyway. That's how I see it this week on Weed Talk News. I'm Jimmy Young from Pro Cannabis Media. Remember, it's a whole new world of weed out there. Use it responsibly.
PCM TV is supported by Salient Systems, a world leader in video management security, and by Revolutionary Clinics, a medical dispensary where the patient comes first, and by Accounting Buds, your number one CPA specialist for the cannabis industry.
Hi, I'm Ben Schauer, New England rep for Salient Video Management Systems. Let me tell you what makes us different in the security space. We're your trusted advisors for all your security needs. I know how complicated the regulations are in cannabis, and working with Salient Systems will be the polar opposite of that. I give free consultations and will walk you through every step of the process so that you can get what you need at the price you can afford. We're robust, we're simple and scalable. We're Salient Systems, your solutions to all your security needs. Please contact me at the information below, and I'm looking forward to being your trusted advisor.
Weed Talk and In the Weeds are two productions of Pro Cannabis Media supported by Revolutionary Clinics, one of the top medical cannabis dispensaries in the Massachusetts area, now with 3 locations in Greater Boston, 2 in Cambridge and 1 on Broadway in Somerville. Rev Clinics has a patient-first mission. They will customize your needs as a medical patient with the proper titration and combination of strains, flavors, and products. Rev Clinics, where the patient comes first. Pro Cannabis Media programming is available live and on demand on our Facebook page at Pro Canna Media, on Instagram at Pro Cannabis Media,